hope you guys are doing good. Just going to give it a little bit, and then we will get started. Let me know if you guys can hear me okay. Gonna give it another 30 to 60 seconds, and then we'll go and get started. What's going on, Brian? Good to see you here at the end. Awesome, appreciate it, Brian. Atwa Lewis, what's going on, guys? It's gonna be a good stream today. Gonna go over some capital preservation techniques that I like to use, and also some good reminders, especially as we've had a lot of volatility over the past few weeks. So it's gonna be a good stream. So definitely stay tuned. Salo, what's going on? Super Gringo, Juan, a lot of good people here, a lot of regulars. M says, hey Data, hope you're good. Do you also trade stocks? So I trade stocks a little bit, not as much as I should. Honestly, one of the most bullish stocks right now is Tesla. So if you know, Elon Musk actually tweeted that Bill Gates better close his Tesla shorts soon. And so I know that they're going to come out potentially with unsupervised full self-driving by the end of the year, or maybe even beginning of next year. But that's going to be a big update. And obviously, he's grown the company to $8.5 trillion, among other things. And so, yeah, I think Tesla stock is a no-brainer buy near $400. And then besides that, look for quantum stocks as well. Those are going to be big over the next few years. And also robotics. That's also going to be another big field. Jojo, what's going on? Zakara, how you doing? AB, good to see you here. Awesome. A lot of familiar faces in here, guys. Going to give it another 30 seconds or so. Let everyone else get in here. And then we will start the stream. Remember, this is being recorded, so you guys will be able to watch it on the Jim Hunter's YouTube channel. If you don't catch it in time or have to leave early, make sure you guys are subscribed if you haven't. Also, make sure you guys like the stream if you haven't. It's going to be a great stream. I'm going to go over a lot of good things. Xander says, hi Data, is trend following or mean reversion strategy better in your opinion? So Xander, I'm glad you asked that question, because trend trading, in my opinion, is the elite strategy. And I know myself, I do a lot of mean reversion trading, but times like these, you've seen how profitable trend trading can be. So because whenever you have Bitcoin, let's just say cross below a major EMA, and let's say that major EMA was at 115K, and it never crossed back above it, right? And just kept declining. Well, you would be in that short trade the whole time until eventually you cross back above that trend line, right? Now, there's pros and cons to trend trading and mean reversion trading. Trend trading, obviously, during chop, it performs very badly because you're constantly flipping over EMAs, crossing back below them, flipping above them, etc. Whereas mean reversion trading, it's much easier because, okay, something gets overbought, you sell it. Something gets oversold, you buy it, right? I mean, it's very easy, especially bouncing between support and resistance levels. And so I think there's a place for both of them. But in my opinion, if you are, let's just say, make it easier, combining them a little bit. If you are going trend trading and you're crossing below a major EMA, well, the next time you get back close to that EMA, you can take a short position, right? And that could be like you're favoring shorts versus longs when you're under a 200 EMA or something. That's a strategy as well. But at the end of the day, incorporating both of them and looking for those major shifts in trends, let's say on the daily you cross below a major trend line, or even the weekly, and then at that point, okay, I'm going to focus mainly on shorts at this point until we cross back above that EMA. So that's, again, just my technique. You could combine them both, but probably trend trading is the best, and just creating a strategy that's going to filter out the noise during the chop would be the best way to play that. And then M says, how do you stay on top of fundamentals? So really, I just have a system in place where I have, let's just say, 100 windows open on Google Chrome, for example. And I'm always checking the same 10 things, like on some windows, and others I'm looking at charts, etc. And so it makes it very easy to look at the same things over and over. And obviously, with news items and stuff, I'll look at Watch Your Guru on X. I'll look at Remarks, his macro account. I'll look at TradFi or TradFin. That's another news channel. And I'll just look at some of the best news channels, and then that'll give me most of what I need. And I'll look at CoinGlass for liquidation data, heat map data. I'll look at CoinMarketCap for the Fear and Greed Index. Look at Farside.uk for the ETF flows. And so it's the same thing every time. So just have those tabs always open, and it's very, very easy to stay up to date with all the macro stuff once you do that. And then M says, are stocks many based on news fundamentals? So Fundamentals for stocks, yeah, they're more so fundamental related. I would say, especially around earnings reports, those are a big thing because a lot depends on the outlook of the stock, right? And because they have a balance sheet, they have all kinds of different technicals that crypto doesn't have. And so it's much more prevalent, or I should say much more reliant on macro news. But with that said, guys, and no problem, Xander. Hope you enjoyed that answer. And do you FinViz? I do not. Not sure what that is, Em. But yeah, let me know what that is, and then I'll tell you afterwards. But let's go ahead and start the stream real quick, guys. Again, this is going to be on how to preserve capital in crypto. It's a very, very important live stream for you guys because, as you know, preserving capital in crypto is very important because we've been in a downtrend for the past few weeks, and I know a lot of people have gotten wrecked. And so this is going to help you guys not get wrecked for the future and stay in the game. So first, the prime directive, capital preservation. So the number one rule in crypto is staying in the game because it matters more than any single trade. So I know a lot of people, they glamorize, oh, I made a 50x or 100x on a certain token. Guys, that's only going to get you wrecked over time, okay? That's not going to make it long term. And at the end of the day, you need to be able to stay in crypto long term because if you're trying to get that 100x, you're going to go broke doing it. Yes, you may make it one time, but over time, it's just going to get you wrecked more and more, okay? So I would definitely look at keeping that up, and also at the same time making sure that you have a strategy in place and watching that accordingly, because if you don't have a strategy in place, then you can easily blow up your account because consistency does compound, and at the end of the day, protecting downside ensures long-term capital compounding. So make sure you are protecting that downside as much as possible and you have a proper strategy in place, which we'll go over how to do that in the future. And then crypto rewards survivors, not gamblers. So like I said, guys, meme coins are very, very, very risky right now. And the biggest thing is not, focusing on those and instead focusing on the safer trades where you have multiple confluence with various indicators. So making sure you guys are staying up to date with that is very, very important as well. And again, we're going to go over more of this as we go through multiple slides. And then also position sizing framework. So risk only 0.5% to 2% of your capital per trade. So this is very important because a lot of times people will like to risk 50% of their capital in one trade or even go all in. And guys, please, please, please do not do this. I tell you guys all the time, if we make a leverage trade on Gym Hunters, just please only risk, I would say max 5%, maybe 10%, but any more than that and you're just asking for trouble because obviously we have stop losses for every trade. But still, guys, at the end of the day, you still want to manage your capital. You still want to diversify, not just be all in on leverage trades. Look at some high conviction spot trades, maybe a little bit in meme coins. Memes have been very weak recently, so I wouldn't really focus on those too much. But there's still a lot of narratives that are good plays, right? Privacy was a big narrative when Zcash was pumping. You had XMR pump with it. You had Rail pump with it. You had Starknet pump with it, right? ZK technology, zero knowledge proof. And so that's where you can put some of your capital. Diversify it. Don't just be all in on leverage trading. Because here's the thing. Leverage is very risky, nonetheless. Even if we make a lot of accurate calls in Gym Hunters, right? We'd still lose trades. It's not like we're winning 100% of the time. And so with that other capital, look to diversify into those high conviction spot trades. And then at that point, okay, good. You make 20% on spot trade. That's amazing, right? Because that's going to compound. So smaller sizes for low cap or volatile assets like meme coins. And then avoid overexposure to single narratives or ecosystems. So even though we had a lot of privacy tokens pumping with Zcash, you're not going to put 100% of your portfolio in privacy tokens. Because if you do, what happens when Zcash pulls back 30%? All your privacy tokens are tanking along with it, right? So you want to diversify. And the way I like to tell people is, okay, have a 30% in your bag, Bitcoin, Solana, Ethereum, 30% in high conviction alts. That could even be Zcash, Hyperliquid, a few others, right? Be careful, Hyperliquid actually has an unlock this month, so just keep an eye on that. Even Aster. Aster's been good, right? And Aster was outperforming today while most everything was red earlier on. And then 20% in leverage, so 30, 30, 20. And then 10% in memes, and then 10% in stables. And we'll go over a little bit more about stables in a minute. But that's how you diversify. Don't overexpose yourself. And again, I'll go over questions at the end of this. We have 10 slides total. And so, almost done. But yeah, we'll go over all of the questions afterwards. So third, stop losses and invalidations. Always define the level where your thesis is invalidated. This is very important, guys, because it's very easy to get emotionally attached in a trade. Very easily to say, oh, I want this to go 50x or 100x or, what have you. Marrying your bags, as they say. Never marry your bags, guys. Never marry your bags. Always have a stop loss in place. Always have an invalidation level. and always have a thesis as well as to why you're holding something. Because if you don't have a proper thesis, well, you're just going to hold it until zero, literally. And so all altcoins eventually go down 90-95% during bear markets. And so have an invalidation level, have a thesis. Once that thesis gets invalidated, get out and get to something else, because we're in a very rotation heavy game, guys. I'm telling you, crypto is on hard mode this cycle. And I say that just because of the rotations. There's been a lot of opportunities, but if you didn't rotate quick enough, well, you just rode your token down another 50%. So I know everyone's probably done that at least once during this cycle or more. But yeah, make sure that you do not have an emotional attachment to your trades and you're focusing strictly on the data, and you have stop losses or soft invalidation zones, meaning, okay, say you have a major support level, and then say you look at the past 7 days of data and you have a wick that went down 3% below that support. Well, maybe place your stop loss 3.5% away, right? And so you have some cushion there. And so that's another way. Or soft invalidation zones. Okay, let's say a daily close below this certain support level, or a 4-hour close below the support level, or even I know Kincaid does 1-hour closes below as well, right? Just whatever your strategy is, have a strategy, because if you fail to prepare, then you prepare to fail. Next, portfolio structure and diversification. So core positions, Bitcoin and ETH, foundation of long-term stability. This is what I talked about earlier. So satellite positions, higher risk trades with smaller sizing like we talked about, and then stablecoin allocation for flexibility and market downturns. So what I talked about earlier, 30% Bitcoin, Ethereum, Solana, 30% high conviction alts, 20% leverage trades, 10% meme coins, and 10% stables. Because if you guys, let's just say you're all in on leverage, and then October 10th happens, and literally, let's just say you're on 2x leverage, well, you would have gotten liquidated because literally everything went down 50 to 75%. And so that was just a clear example, one, to never be all in on leverage, two, to have a stop loss, and three, diversify, right? And so, because at the end of the day, like, you don't want to risk everything all in one asset. Unless it's Bitcoin. I know that's, technically a caveat there, but you know what I mean. At the end of the day, it's just diversify across various assets, across various forms of investments, and then from there, you can capitalize when one is underperforming, the other is overperforming, etc. Then 5, avoid over leverage. So leverage magnifies both gains and losses. And this is something that's very important as well, and why myself and Kincaid, we're only posting leverage trades up to 10x. If it's Bitcoin, maybe 15x, but usually we're between 3 to 10x leverage. And we do that for a reason. Because with larger leverage, or with lower leverage, you can increase or widen that stop loss. And so let's say you want to trade on 20, 30, 40, 50x leverage. If you want to trade on 50x leverage, your stop loss is 2% and you're liquidated. And so if you really want to be at 50x leverage, you got to place your stop, 0.5% away, right? And even then, that's 25% lost. And so you see what I mean? It's much tighter stop loss when on 50x leverage or higher. And so please, guys, don't use high leverage. Just use lower leverage, and that way you can widen your stop loss and manage your risk better. That's the biggest difference. Regardless of, you can adjust your capital you're betting. At the end of the day, it's all about how much room do you want to give yourself for your stop loss. And then only use leverage when your thesis, volatility, and liquidity align. So you have your support and resistance aligning with your RSI, stock RSI, with your EMAs, with your liquidation data, with your fear and greed index, with your ETF flows, etc. Right? There's a lot of things that can align and provide confluence for your trade. But if you're only trading based off what someone calls out, well, if it goes against you, you're not going to have that conviction to hold, right? You're going to panic. And so making sure you have a thesis, especially if you're blindly following someone. And I get it. Gym hunters who make leverage calls, that's fine, because we provide you an entry, exit, stop loss, etc. But if it's, let's say, someone on X who's telling you to buy a certain token, but that's it, right? There's not really any big thesis behind it. Well, how are you going to have conviction if you're going off of someone else's call? So that's just something as well to keep in mind. Next, market cycle awareness. Understand macro cycles, accumulation, expansion, euphoria, and capitulation. Scale risk up or down based on cycle position. And so there's various different cycles in the market. And so the biggest thing is knowing that, okay, accumulation was in October of 2023 and before that, right? People started accumulating, and then finally we started to go to expansion afterwards. Now with expansion, that's where everything started to go up. We started to have a lot of green in the market into 2024. And then as we got into the end of 2024 into 2025, that was euphoria, because we had Trump being elected president. He was the first pro-crypto president. We had Gary Gensler getting out of, as Fed chair, or the SEC chair more so, and we had a lot of positive catalysts happening. And so with all of those coming into play, everyone's euphoric. Everyone thought this market is going up to $250,000, right? And it still could. It still could next year. I'm not saying it can't, but those are just signs of euphoria. And you look at, we went up from 25K all the way up to 125K. I mean, that's a sick, was that a 5X on literally large size, right? Nation states, countries are getting in. That marks the temporary top, if not the cycle top. And so make sure you understand those and then scale up or down with your risk based on that. So if there's euphoria, scale down your risk. You're not going to take more risk when there's more euphoria, right? Because that means the top is near. Same with if there's more fear, where you're going to scale up your risk because there's more fear in the market. Potentially, you could buy lower, right? So again, there's just various ways you can scale your risk up and down and then take profits systematically during parabolic phases. When you have those huge moves high, even in a certain token you're in, say it goes up 50, 100% in a day, take some profits out, right? Be smart about it, because if you're not, then the market is going to take those profits for you. Next, risk management tools. ATR-based stops for volatility. Trailing stops for trend capture. On-chain indicators to assess market health. So ATR is average true range. Basically, it's going to adjust your stop loss based off where the price is. And so you can use that to place your stop loss, or you can use trailing stops, which, let's say you have a 2% trailing stop. Bitcoin's at 100K, goes up to 102. Well, now your stop's at 100K, 2% below. And then it goes up to 104. Well, now your stop's at, say, 102K, right? And so there's just various ways you can do that, or you can have a fixed stop loss, or even a daily close or 4-hour close below, right? That's more of a soft stop loss. So there's various different ways, but nonetheless, always have a stop loss. And then use your on-chain indicators, whether it's ETF flows, liquidations, whale wallets, even TVL, total value locked on-chain, or just indicators in general, RSI stock, RSI, MACD, EMAs, 50 EMA, 200 EMA, etc. That's going to help you manage your risk and manage where the current market cycle is at. Then having emotional discipline. So detach identity from outcomes. Follow system rules even when emotions resist. Document trades to reduce bias. This is very important, guys, because a lot of times people will associate, okay, if I'm failing, that means I'm a bad trader, or they'll get fearful and they'll start panicking, right? Just follow your system rules even when emotions resist, because say you're euphoric and you want to hold for another 2 weeks or another month because you think the market's going to keep going up. Guys, if you have a strategy in place, you have rules in place, follow them. And that goes both ways. If you're scared and your system says to buy, then just buy, right? And obviously there's various things you can do, but make sure that you are still adjusting to those accordingly. And then document your trades to reduce your bias. So journaling trades is one of the most important things you can do, just like with working out, because if you don't journal your workouts, well, how are you going to know what weight you did before? You may remember for a couple weeks, but after a few months, you're going to forget. And then at that point, it's going to become harder. You're going to think, oh, I think I did this many reps or this much weight. And then you're not going to be able to build muscle because you're not going to be having that consistent progressive overload because you're going to forget how much weight you did the week prior. So journal your workouts just like you journal your trades. At that point, you'll be able to be a better trader every single week. Learn from your mistakes so that you're not doomed to repeat them. Number 9, fraud, scams, and smart contract risk. This is very important as well. You need to avoid anonymous teams unless there's a proven track record, because there's so many scams nowadays in crypto that if a team's not doxed, just be careful, guys. If there's reputable influencers backing them and there's reputable partners backing them, maybe. But any team can fake things, and so please be careful. Please look at audits, right? Like certain security firms are auditing something. Now, be mindful of that as well, because Certic actually audited a few protocols, and those protocols ended up scamming people still because they were paid off. And so even audits, can't be trusted as much. And so really look for proper backing from legitimate companies, from legitimate, I don't even say influencers per se, because again, those are few and far in between. But at the end of the day, look for positive signs and look for doxed teams is going to be your best bet versus someone who's anonymous. Then you have a little bit more risk with that. And then use hardware wallets and segregate funds. And so, as you know, with FTX crash, that opened up people's eyes to not storing all of your crypto on an exchange, diversifying it, across various reputable exchanges. And I say that meaning, Coinbase, Kraken, even Binance technically. I know they've done a lot of shady stuff in the past, but Bybit and a few others as well, BloFin, etc. And so those exchanges, spread your funds across those, hot wallets, even MetaMask, Rabby, Phantom, etc. And then finally, cold storage wallets, which is the most important, like Trezor is a good one. Even Ledger, technically, but they had some security issues in the past. And so Trezor is a good one to use, or even Keystone, they're air-gapped wallets. And so make sure you are diversifying those funds, because at the end of the day, if you have all of your funds on one exchange or one hot wallet and it gets hacked, well, then you're done, right? And so make sure you get in the habit of diversifying. Also, going over scams, please never click links in text messages and emails. Never give anyone your personal info over phone calls. Like, guys, I'm telling you, there's so many scams nowadays. Even there's one scam going around that they have at Microsoft.com but the M is spelled with RN. So literally the letter R and the letter N is right next to each other, and it looks like an M. So be careful, guys. Scammers are getting creative, and so make sure that you are going to the official website, not clicking any shady links and any emails, text messages, calls, etc., and going to the official website first. That goes with even clicking links for airdrops. Definitely be careful about that. They can hack your hot wallet very quickly. If you click a scam link, they can drain your wallet just like that. Then finally, capital preservation habits. So daily journaling of your thesis and risk exposure. Make sure you are journaling every day, guys. If you're not trading, that's fine. You don't have to journal. But at the same time, just journal everything. Journal what you're feeling. Journal how your day was. How much sleep did you get? Were you eating right? Health is wealth, as they say. So make sure you have your health in check. Working out, practicing properly good habits, not partying all the time, not staying out late all the time, making sure you're getting to bed at a consistent time. That way your schedule is, one, consistent, but also, you can track your results much easier by having that consistent schedule. And then a weekly review of your win or loss rates and mistakes. So this is very important because, again, even the most successful traders only win 7 times out of 10. They still lose 3 times out of 10. And so even if you fail, make sure you learn from those mistakes, because at every loss, that means you're closer to a win if you are learning from those mistakes. And then also monthly rebalancing to maintain those risk boundaries. So looking at your monthly results and where you're at in the cycle, and if you're getting more euphoric, okay, maybe I need to start taking some more profits. Maybe I need to lower my exposure to the market, and then vice versa. Okay, we're getting more fearful. Now there's indicators that are overexhausted. Now we're getting to more major weekly or monthly support levels. Okay, maybe I'll start getting back into the market, right? Investing my stables, etc. So just make sure every month you're reevaluating where you're at and where you're at in the cycle, and then that way you can manage your risk appropriately. So with that said, let's go ahead and check the questions. Now that was a lot, but I want to make sure you guys had all of that data, because how to manage your capital in crypto is very, very important, especially preserving it, because they say it's not about how much you make, but about how much you keep. All right, let's see what other questions we got here. Let's see. What's going on, Sprockos? Good to see you here. Joseph says, hi, what do you think about leverage? I do a $100 split for 3 buys, 30 and 50x. Is that bad, or should I go with 2 to 5x with $100? So, Joseph, right off the bat, I do $100 with 2 to 5x, and I'll tell you why. Because if you do 3 buys with 50x, again, I know that you're trying to DCA down and nail that entry, but you don't have a lot of room to run, right? Even if you're DCAing 3 buys with 50x, let's just say, for example, your liquidation price is 2% away, so you're DCAing every 1%. Well, that's still maybe going to put your liquidation price 3% away for on average, and that's still not that much, right? Whereas if you're doing a 2 to 5x with $100, then technically your stop loss can be 5% away, and you're only losing 25%. You see what I'm saying? And so that is always, in my opinion, the best way to go. The lower leverage, higher amount, and you could be betting the same amount in general, but at the end of the day, your stop's going to be wider, so you're going to be able to manage that risk a little bit better. Lewis says, thoughts on Aster? I'm still bullish on Aster. I'm bullish on Aster. So, and I'll tell you why. They're doing a lot of buybacks. They're doing a lot of positive things so far that they've changed over the past few weeks. And I know a couple people on my team, they're actually very bullish on it. And so I think that Aster could do very well in the future. Even its outperformance today is a testament to the sentiment changing and the performance changing when it did bottom out below $1. So I do think that Aster's probably a good bet if you can buy it at major support when the RSI is oversold. Probably on the 4-hour would be your best bet. But yeah, I think Aster is having a change, and I think it'll start outperforming in the near future. Joseph says, I don't stay too long and always take profit if I hit 50% or more. Absolutely. Jojo says, you think Bitcoin goes lower to the 86K support? I think it's possible, Jojo. I think it's very possible. I know that people are looking for it to go down to 70K eventually, but some top traders that I'm talking with, they're thinking it's going to go at least to 105K, to that 200 SMA. And I don't disagree, because usually in a bear market, even if we're entering one, we always retest that 200 SMA. And that's right now is around 103 to 105K. So I do think it's possible Bitcoin bounces up to there and then eventually goes lower to 70K. I mean, very real possibility, honestly. That would not surprise me at all if we did both of those. And so AB says, thoughts for December. December, tentatively bullish. And a couple reasons. Excuse me. So QT ends. Quantitative tightening ends in December 1st, I believe. And so usually after QT ends, we have a little pump. And being Q4, I think in general, there'll probably be some type of pump, right? And because we really haven't had a big pump in Q4. And also, you have interest rate cuts. It may be happening. I think the chance is now 45%, not even that much. And I think that's being priced in as well, is no rate cuts. And so if the Fed announces no rate cuts, I think we'll still most likely pump. But again, that's going to be something that we'll see as the date gets closer, what that percentage is on poly market. But keep an eye on poly market for rate cuts for December. But yeah, tentatively bullish for December. Joseph says, thank you. We'll try that. Like your content and all the info you give. Did you have time to look into Dolum? I did not have time to look into Dolum, but I'll probably do that after the stream, see what I think about that. And is it 30 cents too high for pre-sale? So I would just say, if you're asking if it's too high, it may be. I would look at what other top traders are saying about it and if there's still opportunity for it. But just know that this market is very rotation heavy, so any type of gain that happens initially after the pre-sale, it'll probably get sold off into. So just keep that in mind. I know some pre-sales have done good recently, but it just depends how many people are invested into it, how much capital is invested, and then from there, deciding if it's right for you or not. So Cara says, what do you think? I bought Solana from 163 and I'm holding it, thinking BTC will reclaim the 100K soon. It will hit it. It's just risky, right? Holding Solana from 163, I mean, it's still a very risky position, seeing where Bitcoin's at right now. I don't know if it does reclaim 100K. I can't see it going much higher than that, maybe 103 to 105. But at the end of the day, I mean, it's just about what's performing, right? What's outperforming versus Bitcoin. If Solana's not outperforming, maybe it's time to buy something else. But I will say there's good support on Solana at around $117 to $120. So if you can DCA down there, that may be a level to look at. But look at the indicators. Wait till that RSI is oversold on the daily. Then it may start being, a little bit better from a risk-reward perspective. AB says, when is Trump 2K stimulus coming? He mentioned that it was going to come mid-2026 now. He pushed it back. And so that's also why there's a lot of FUD in the market. Lewis says, thinking of entering your premium group to leverage my way and later enter Gym Owners Premium as well. Awesome, Lewis. Looking forward to having you there. Definitely, if you have any questions on that, let me know. Also, I have my X account. If you guys aren't following me on there, at the CryptoData. So always provide a lot of good content on there. So definitely follow me there. I'll go ahead and leave that. Let me go ahead and type that in the chat for you guys. Yeah, that should be a good link there. But yeah, if you guys aren't following me on X, definitely follow me. Provide a lot of good content. Juan says, is Sui a dying layer 1 and will it underperform to Solana over a long time horizon? Sui was one, they thought it was going to be the Solana killer, but it turns out the performance is not really there. And so there's been a lot of FUD about it, and it's just been in a downtrend ever since. It could still be good, but the team needs to show some initiative. They need to have some big updates, because unless they do, it's going to keep bleeding. And so I would look for a change in the market structure when it makes higher lows, crosses above major EMAs like the 50 or 200, and then starts changing from there. So just keep that in mind. M says, do you think I can make decent returns if I have a $400 in spot and only trade spot? You could, M. I mean, even looking at Aster, right? Aster's at below $1. Now it's at $1.34, $1.35. That's 30%. So if you put it in there, obviously hindsight's 2020, but now you'd have $500+, then you could compound that. Now it's very risky putting all your money into one trade for spot, right? But if you're doing it when the risk reward is on your side, technically you could still make some money. So yes, I will say you still can make some money. It's going to be harder, but as long as you're making responsible decisions, slowly growing it, not trying to make that quick 10x, then yes, it's possible. Absolutely. But it's just going to be slow. Just know that. But over time, consistency will compound. Crypto OG says, lifetime membership. Yes, so if you, like I said, just DM me on X if you have any questions on that, at the CryptoData. And yeah, definitely we could talk about that as well. But yeah, there's a lot of good stuff, guys. I do think there's opportunities in the market right now. I do think that we are getting very close to a bottom if we haven't hit it already, at least to a pump near 100K. But if not, then I will be looking around, like someone mentioned earlier, 86 to 88K. That'll be some good support level, the next major one. And then from there, we'll see what happens. But there's still opportunity. Just don't get depressed. No problem, M. Glad to help you out. Don't get depressed, guys. I know everyone's worried. Have we entered the bear market? If we have, there's still going to be dead cat balances. There's still going to be opportunity. And there's still going to be opportunities for shorts, right? So in Gym Hunters and other groups, we're still going to focus on shorts. We're still going to focus on both sides of the market. We're going to be non-biased, which is something that every successful trader is. They focus on the data, and they remove emotions out of the equation. And so the sooner you do that, the sooner you learn from your trades, the sooner you can become successful. Zakaria says, any ideas on ETH for the smaller time frames? For ETH, and I can go ahead and look at it real quick. I know the chart's not going to be on stream, but just real quick, I'll go and look at it for you guys. ETH is at 30.88 right now. On the smaller time frame, we're talking 4 hour. I mean, the 4 hour, the stock RSI is overbought. So the stock RSI is going to curve to the downside. I could at least see Ethereum retesting that 30.50 level. 30.50, and then from there, the next major area would be 29.30. So I would look at those two areas, guys. 29.30 is the big support. 30.50, maybe DCA there. But yeah, stock RSI on the 4 hour, overbought. RSI is curving to the downside. Maybe it's going to cross below its signal line. So I'd just be careful, honestly. I would just be careful with that because probably will continue down just for a little bit. But with that, guys, that is going to do it for the stream. If you guys haven't liked the stream, I'd really appreciate it if you liked it. It's going to help us grow the channel. Again, if you haven't subscribed to Gym Hunters, definitely do so. If you haven't followed me on X, I linked my X account just a couple messages above at the CryptoData. Follow me on there. If you have anything to ask me, you can DM me on there. My DMs are always open. M says, do you see Bitcoin coming back to 100 plus? I'm still in my 94.6 trade. I do still see it coming back to 100 plus eventually. And I will say eventually, meaning probably in December, because it is rejecting off of that 93.6K resistance that it had on the daily now. It did make that was support November 16th, and then today it rejected off it as resistance. And so the RSI is rejecting back to the downside. The stock RSI is actually overbought on the 4 hour, I should say. So the 4 hour may bring Bitcoin a little bit down again. Maybe it could have a bounce from 90.3K. If it falls below that on the 4 hour, if it closes below 90.3K on the 4 hour, we may be in for more downside, guys. So just be careful on that. Again, the 4 hour is overbought on most time frames, so we may have a short-term pullback, and we may continue higher just from the daily because the daily is oversold on most time frames, or I should say most tokens. So that would be something I'd be looking at, but probably a little bit of a pullback before going higher. Sebastian, thoughts on where BTC goes for the rest of Q4 and beginning of Q1 next year? Probably 100 to 105K and then back down again. So 100, 105K in December and then back down probably until February, March. And then we may have a little short-term pump as people start front-running maybe some more rate cuts or quantitative easing or some more stimulus. Maybe Trump moves that up. But yeah, I think like probably March, April, we'll start pumping again after the initial December pump and then probably drop in January, February, March, and then go from there again. So it's hard to say because this cycle is so much different from where we were at before. It's just, yeah, you just need to play it level by level, month by month. Sala says, how do you define key levels that coins need to close above or below to define their bullishness? I do that by TA, so support and resistance levels. So chart those on the daily or weekly time frames, and you can learn how to do technical analysis with my video on Gym Hunters. It's the third video from the bottom. If you go to the live tab, it's called Technical Analysis Basics, and you can learn how to draw support and resistance levels. And so make sure you look at that. You'll learn a lot from that video. Again, go to the live tab on the Gym Hunters YouTube channel, third video from the bottom, Technical Analysis Basics. But with that, guys, that's going to do it for the stream. Thank you so much for watching. Hope you guys have a great rest of the week. Please like the video if you haven't. Always appreciated. And if you want to follow me on X at the CryptoData, follow me on there. Thank you guys so much. And hopefully you guys have a great rest of the week. And Crypto OG, no thoughts on Telcoin or ZBEC. So thanks, guys. Love you.